Here is a question on nominal ledger accounts. At the end of his financial year, on the 31st of December 2018, Sam Mehta, the owner of a business, was preparing financial statements. The following information had yet to be recorded in the general ledger of Sam's business. So we're going to have to take these into account in a moment. At the 31st of December 2018, inventory is valued at £14,050. So that's going to be your closing inventory, that is. Depreciation is to be revised on vehicles at 20% per annum using the reducing balance method. The debit balance on vehicles at cost account on the 30th of December 2018 is £40,000. We'll come back to that in a second. The provision of doubtful debts is maintained at 4% of trade receivables. At the end of the year, trade receivables total £16,400. On rent income, we've got £540 is due but unpaid, and vehicle expenses, £250 are prepaid, so they're paid in advance. Because recording information in the ledger accounts shown below, then balance the accounts at the 31st of December 2018. Right, so we've got the inventory account to do, provision for depreciation of vehicles account to do, provision for doubtful debts account, rent income account, and vehicle expenses account. You notice on each account we've already got some pre-filled amounts. So some of these amounts are all being pre-filled in these accounts, and we're going to use it in our calculations in a moment. Let's start with the inventory account. When the 1st of January 2018 balance brought down is £12,240. Right, that would have been last year's closing inventory, which is this year's opening inventory. And the opening inventory this year goes in our income statement. So I'm going to transfer that £12,240 to our income statement. So on the credit side, I'll put income statement in the details. The date is going to be the end of the year, so it's the 31st of December 2018. And the amount is going to be at £12,240. And that's the first bit done, it's not the end bit. So back to the information now. The first point, inventory is valued at the end of the year at £14,050. So that's going to be our £14,050. It's going to be carried down at the end of the year. So 31st of December 18, got balance carried down, £14,050. Now, out of interest, there was a question like this. You had to do this T account in the last summers, so May, June 2024 real exams. Now, the balance carried down, that's also going to go in our income statement. So it's in our income statement in our cost of sales section. So income statement in the cost of sales section is going to be the £14,050. So that's the 31st of December 2018. Now we're going to total both sides, and they should equal the same amount. And they do. Now you've got balance carried down, you're going to have a balance brought down. So the next day is the 1st of January 19. You've got balance brought down of the amount at the end of the year, £14,050. So the £14,050 there, that's going to be in our income statement cost of sales. And this is the amount on our statement of financial position in our current assets. Our closing inventory then, at the end of the year, the £14,050 is going to be in our current asset section in the statement of financial position. So let me just put next to that. So that's your statement of financial position figure. And the one on this side, that goes on income statement. And also this one here, that's your income statement as well. So that's your opening inventory and your income statement. That's your closing inventory on the income statement. And that's the balance carried down in your statement of financial position at the end of the year, which will go in your current asset section. So that's your inventory account. Right, provision for depreciation. We are told something at the beginning of the year the depreciation was £14,400. So we're going to need to work out the depreciation now. So we need to know what method is going to be used, and we also need to know what the cost was. So we'll go down to my workings at the bottom. Right, So vehicle depreciation, I've copied down for the question as 20% per annum reduced and balanced method. The reduced and balanced method, we need to know what the carrying amount is, then we times that by the percentage. So the cost we're told in the question was £40,000. Accumulated depreciation is the amount in my provision for depreciation account, so I'll go back to that to show you. That's the figure there at the beginning of the year, 14,400. That's depreciation for all previous years. And if you take that from the cost, you're the carrying amount of 25,600. To work out the depreciation, you take your carrying amount of 25,600 and you times by the percentage, which is 20%. So your depreciation charge for the year is 5,120. So we're going to have to put that now into our nominal ledger account. So 5,120. So there's now going to be an additional depreciation going on the credit side. That's going to be shown in our income statement as an expense. It's for the year, so it's going to be at the end of the year, 30th of September 2018. So that's this year's depreciation. Can be added on to the depreciation at the beginning of the year, and then at the end of the year, we'll have a balance carried down. So that's going to be your 14,400 plus your 5,120. I'll put my total here for you so you can see it. So it comes to 19,520. So the balance carried down is £19,520. Now remember, there's usually a mark for the brought down figure. So you've got a balance carried down, you've got it brought down on the opposite side, underneath your totals. So balance brought down, the amount's the same as the carried down amount of £19,520. And the date's going to be the next day, which is going to be the 1st of January 2019. So that's your provision for depreciation vehicles account. Well, now we've got provision for doubtful debts account. Now we're told at the beginning of the year that the balance brought down was £720. So that's basically your provision for debts at the end of last year, which then becomes the first day of this year. We need to work on provision for this year, at the end of this year, and see if there's any difference, in which case that will go to the income statement as either an increase or decrease in provision for doubtful debts. Now, just to remind you, provision for doubtful debts is also called provision for recoverable debts as well. Right, so let's go down to my workings again. Let's go back to the question first, I'll show you. Here you go. The provision for doubtful debts is to be maintained at 4% of trade receivables, and at the year end, trade receivables total 16,400. So we know what the trade receivables are, and we know the percentages. So let's go down to the workings. There you go. Provision for doubtful debts is trade receivables times percentage. Trade receivables was 16,400. The percentage was 4%, and 16,400 times 4% gives us £656. So that's the provision at the end of the year. Now I'm going to go back to the account now. So that's going to be my balance carried down at the end of the year. So let's go back to the T account now. So £656 is going to be carried down. So balance carried down. And the date's the end of the year, 31st of December 18, which means we'll have a balance brought down on the next day, the 1st of January 19, balance brought down of £656. Now, in case you're wondering why it's on the credit side here, it's because this reduces your trade receivables. This is the amount we're expecting not to get from our trade receivables. Now, trade receivables is a debit balance, so the amount we're not going to receive is going to be the opposite. The credit side is our provision for doubtful debts. Now, if you look at our T account now, the credit side totals £720. The debit side totals £656. Now, they've got to be the same. So it means there's been a change. At the beginning, it was £720 provision. Now it's gone down to £656. So therefore, we've got a difference between the 720 less the £656 gives a difference of £64. Now that difference goes to your income statement. That's the end of the year. So So what's actually happened here, the provision last year was £720, it's now gone down to £656. So that would actually go in your income statement underneath the gross profit and in other income, because there's been a reduction in the provision for doubtful debts. So that's your provision for doubtful debts account. The next one is your rent income account. Now, we've got some information in here already. During the year, we received into the bank account £4,180. That's money coming in for our rent account. And at the beginning of the year, we had a balance brought down of £220. That means last year there was £220 which is unpaid. Now let's see what was in the question now. So go back to the question. It's got rent income at the end of the year of £540 is due but unpaid. So we're due another £540 for income, rent income. So I'm just going to put that number down there before we forget it. So it's going to increase the amount of rent. So it's going to be on the credit side. But we haven't received it yet. So it's going to be called balance, carried down at the end of the year, 31st December 2018. So let's put that brought down one now whilst we're doing this bit. So the 1st of January 19. So 1st of January 19, we've got balance brought down of £540. Now we look at our T account balances now. The debit side and credit side are different. The credit side totals 4,720. The debit side totals £220. So what that means, the difference is going to go to our income statement. So this is going to be the rent received in our income statement. So it'll be the 31st of December 2018. So it's going to be the 4,720, which is the 4,180 plus the 540. Then we're going to take away the £220, which will give me a figure of £4,500. So that's the amount now which is going to go in our income statement. So now the debit side also totals £4,720. So the 31st of 2018, the amount in the income statement will be £4,500. Well, now we've got vehicle expenses account now. Again, we've got some information. The debit side, it says on a bank account throughout the year, they paid on vehicle expenses £3,230. At the beginning of the year, they owed from last year £170. Right, let's see what's in the question now. The last point, vehicle expenses, £250 are prepaid. So it's £250 prepaid. So it's been paid in advance. It means it relates to next year. So the amount we paid is in there. If it's prepaid, it's going to be on the opposite side. Now let me just check the amount. I think it was 520, or was it 250? 250. So we've prepaid £250, so we're reducing what was paid in the year. If it's been prepaid at the end of the year, that is now your balance carried down. And the date's the end of the year. '31st December 2018. Now again, we need something to go into the income statement. Now, so I've noted that side there totals £3,230. This side totals £420. So I'm going to have to add something on this side. But we want at the end of this side, we want the balance carried down to be at the bottom, or the last figure, last entry in our information. So I'm going to move it down a little bit. So now the difference I'm going to put in there. So the debit side, we started with £3,230. We're going to take away £170 related to last year, then take away the amount that relates to next year, £250, and that'll be my figure in there. So it's going to be £3,230, take away £170, and take away £250. I get £2,810. Now that'll be the amount which goes in the income statement. So that's the expenses relating to this year. So it's the 31st December 18. And again, because we've got a balance carried down, to get this extra mark, we want the balance brought down on the opposite side underneath the total on the next day. So it's going to be the 1st of January 19. It's going to be balance brought down of £250. So that is basically a very good question to look at for nominal ledger accounts. We've got depreciation, inventory, provision for doubtful debts. rental income and vehicle expenses. And don't forget to show your workings out as well. Okay, thank you very much.